The cryptocurrency market experienced a dramatic downturn on March 10, 2025. Investors were hit with a wave of fear and uncertainty. Bitcoin, the flagship cryptocurrency, plummeted to $80,000. This was a steep drop from its recent highs. Ethereum, the second largest cryptocurrency, also suffered a significant decline. It fell to $2,000. The sudden crash sent shockwaves throughout the market. Panic selling gripped investors. Many rushed to sell their holdings, fearing further losses. Data revealed that a majority of the selling came from recent buyers. These investors, who had entered the market during a period of relative stability, were shaken by the sudden downturn. Their actions exacerbated the market decline. The macroeconomic climate played a significant role in the downturn. Fears of a recession in the United States loomed large. President Trump, in a candid interview, acknowledged the country's economic challenges. He stopped short of confirming a recession, but admitted to a period of transition. This uncertainty fueled anxieties among investors. They began to question the stability of risk assets, including cryptocurrencies. The crypto market, once seen as detached from traditional markets, proved vulnerable to macroeconomic forces. The interconnectedness of global finance became apparent. Investors, spooked by the prospect of a recession, sought safer havens for their capital. This flight to safety further depressed the cryptocurrency market. The day served as a stark reminder of the volatile nature of cryptocurrencies. In a surprising turn of events, President Trump announced a bold move. He revealed the creation of a strategic national Bitcoin reserve. This reserve, he declared, would secure America's position as the world's leading Bitcoin power. The Treasury and Commerce departments would manage this reserve. It would include a diverse portfolio of cryptocurrencies. The reserve would hold Bitcoin, Ethereum, XRP, Solana, and Cardano. This strategic decision signaled the U.S. government's growing acceptance of cryptocurrencies. Trump emphasized that the reserve would be funded through budget-neutral methods. He aimed to acquire more Bitcoin without burdening taxpayers. However, the announcement was met with mixed reactions. Some analysts praised the move as forward-thinking. They argued it would strengthen the U.S.'s position in the evolving global financial landscape. Others expressed skepticism, questioning the timing and efficacy of the strategy. Critics, like Agni Linga, argued the strategy lacked clarity. They pointed out the absence of new Bitcoin purchases. This omission, they claimed, created uncertainty in the market. Linga and others argued for a more transparent and aggressive approach to building the reserve. The U.S. government's decision to create a Bitcoin reserve sent ripples throughout the world. Other nations, watching closely, began to consider the implications. Analysts speculated that China, a major player in the global economy, might follow suit. The recent investment by Abu Dhabi's sovereign wealth fund in Bitcoin further fueled these speculations. The creation of national Bitcoin reserves could reshape the global financial order. It raised questions about the future of traditional reserve currencies, particularly the US dollar. Some experts envisioned a future where Bitcoin, or a basket of cryptocurrencies, challenged the dominance of the dollar. The potential for a multipolar world with competing reserve currencies sparked both excitement and concern. Proponents of Bitcoin celebrated the prospect of a more decentralized and democratic financial system. Critics, however, cautioned against the risks associated with volatility and regulatory uncertainty. The global implications of the U.S.'s move were far-reaching. It signaled a potential paradigm shift in international finance, one where digital assets could play a central role. The world watched with bated breath, eager to see how this unfolding drama would reshape the global economic landscape. Despite the market turmoil and mixed reactions, the long-term outlook for Bitcoin remained a topic of intense debate. Proponents of the cryptocurrency argued that the creation of a U.S. Bitcoin reserve, despite its current form, was a watershed moment. It legitimized Bitcoin as a store of value and a strategic asset. They argued that this move would inevitably lead to wider adoption. Institutions and individuals, observing the actions of the U.S. government, would be more inclined to consider Bitcoin as a viable investment. This, they believed, would ultimately drive up the price of Bitcoin, potentially to new all-time highs. However, skeptics remained unconvinced. They pointed to the inherent volatility of Bitcoin and the lack of clear regulatory frameworks. They argued that these factors would continue to hinder mainstream adoption. The future, they asserted, was still uncertain. The long-term impact of the US's decision to create a Bitcoin reserve remained to be seen. It was a gamble, a bet on the future of finance. Only time would tell whether it would pave the way for a world awash in Bitcoin, or whether it would be remembered as a curious footnote in the history of finance.